What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit notification bell so don't miss future videos. So I had a really good YouTube collaboration with Ari. He's on Blue Lion Finance, and it was really good catching up with him. And a lot of his questions he asked me, I was not prepared for. And one of them was phase 2 with my dividend portfolio. I've really emphasized that. And I didn't want to try to sound like I was wishy-washy or not answering the question. I'm just being straightforward with my dividend portfolio. I am an income investor. I'm a dividend growth investor. And I very much explained that dividend growth always wins. But these income stocks are going to buy my dividend growth stocks in the long term. I'm going to use their income once I load up on them to reinvest into my dividend growth stocks. I have 3 really good ones. I'm going to do kind of a brief review on these business development companies. I absolutely love them. I'm not at 200 yet. Once I get there, I'm hoping at the end of the year in 2025, at least all 3 of these will be in the 200 share mark. I would be thrilled. And then I don't have to reinvest anything anymore, and I can use its income to buy Aflac, Starbucks, Coca-Cola, EDP. That's kind of my goal. The Yieldmax ETFs, the covered call ETFs, use their income to buy dividend growth stocks. The strategy is working very well so far, but I need a little bit of a kick. And as I said, with the Yieldmax ETFs, I need a little bit of zing. If I'm having sushi, I want some really strong wasabi to get things going. I want it to where my nose is running and my sinuses are going crazy. That's what the Yieldmax helps out with. And then this is kind of like the soy sauce with the sushi with my high yield business development companies. Those two combined make the sushi really good. So, I like the wasabi, I like the soy sauce, I like the sushi or sashimi. And those two combined will help buy dividend growth stocks to make everything complete. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos, because I'm going to review these 3. I'm going to explain why I like them. Smash that like button. Let's check out these high yield business development companies right now. First one I want to go over is Saratoga Investment Corp, sitting at 2408. The dividend yield is 12.29%, a PE ratio of 15.71. The average volume was 112.19K. The market cap is 332.32 million US dollars. Its year range is 2156, 2640. Day range is 2388 to 2415. Previous close is 2402. So we're going to look a little bit into Saratoga Investment Corp, mostly the revenue trends and the dividend history. It is a high yielder, so we have to be aware of that. It's not doing too hot against the S&P 500, makes it very attractive for myself as an income investor. So far with these trends, which is very attractive, this is annually in millions US dollars. 2018, 3861, 2019, 4770. 2020 50 844, 2021 57 65, 2022 70 74, 2023 99 10, and 2024 143 72. So again, 90% of what they make go back to investors. That's the rule of a business development company as well as a real estate investment trust. Let's jump to the dividend history. I've been really emphasizing this one a lot and posting videos on it the past 2 years. So again, 200 shares of this. Imagine this. Again, there's no guarantees with BDCs. The dividend trends may not be there permanently. Could be a decrease as well. 2015, the quarterly dividend was 33 cents, 36 cents, 40 cents. And it was ranging about 46 cents, 47, 48, 49, 50. Then 2018, 51, 52, 53, 54. And then we got about 55, 56. Then in 2020, 40 cents, 41, 42, 43, 44, and then we are in the 50s range in 2021, 52, 53, 54, 68, 69, 70, 71, 72, 73, 74 in 2024, and it looks like a special dividend on 12/19. So thing is, is it going to be there forever? Is it going to be 74 cents? It could be stagnant there. Okay. 68% of its earnings with the payout ratio. Dividend increases in the last 5 years is 15. Is this going to be growing in 5 years, 10 plus? Doubtful. Dividend yield or the dividend growth is 14.68%. Is that going to stay? Like I said, probably not. Probably going to slow down, maybe be stagnant, but still to get in the 70s and be a quarterly dividend distribution. Imagine that each quarter using that income to buy dividend growth stocks with a dividend yield of 12.29%. And if you bought one share, you made $2.96. That's why I buy these business development companies. I like the dividend growth way better, the dividend growth stocks way better than the income stocks or the high yield dividend stocks and business development companies. But you're seeing where I'm going with my strategy. I'm hoping by 43, 44, and I told Ari, do I plan on retiring on dividends? It's probably not. I don't see that as a possibility right now. I'm just focusing on phase 2, and then when I start seeing phase 3, where I start really going after the monthly dividends, the monthly, phase 4 is really where I just go all in with dividend growth. Then phase 5 is when I just take the dividends. So again, we're not even like phase 2 yet, not even close. So we need to get to some of these 200 shares with Saratoga, and the next one definitely needs to get to 200 shares. Let's check that one out. We're looking at Fidus Investment Corp, sitting at 21.38. The dividend yield is 11.32%, a PE ratio of 7.62. Average volume is 223.76K. The market cap is 725.10 million US dollars. Year range is 1841 to 2168. Day range is 2131 to 2152. Previous close is 2141. So again, not beating the S&P 500. Business development company. Let's check out the revenue trends and dividend history. Now, again, I'm going to be very basic. I'm just showing revenue trends. I'm not going over debt, earnings per share, anything like that. Right now, I'm just being very basic, showing the revenue trends. One big thing with business development companies is revenue trends. They got to share their revenue with us. They want to make money. We want to make money as income investors. So that's important. So quarterly dividend, okay. Annually in millions US dollars, 2017, 68, 2018, 76, 2019, 77, 2020, 85, 2021, 90, 2022, 94, 2023, 130. So that's a significant increase. Let's check out the dividend history. Now, here's the perfect example of why dividend growth always wins. So look at 2015, 38 cents, 39 cents, 2016, 43 cents, 39 cents, stagnant, see the stagnant, and then 39 cents, 30 cents in 2020, you see a pandemic, and then it jumps to 38 cents, 39 cents, 42 cents, 41, 53 cents, 43 cents, 61 cents, 66 cents, 70 cents, 80 cents, and then 65 cents, and then 59 cents, and then 57 cents, and then 61 cents. So I'm going to zoom it out a little bit. The dividend growth in 5 years is 6.98%. Is that reliable? No. Payout ratio is 71%. You're going to see that with BDCs. The dividend increases in the last 5 years is 12. If you bought one share, you made 172 with an 8.04% dividend yield. Is this going to be long-term wise a good dividend growth stock? Is the dividend growth going to grow faster than that? Probably not. So with income and high yield stocks, As I always said, it's going to be a little bit slower with the dividend growth versus the dividend growth stocks with like, that have 1%, that I was just discussing with Ari. I will send you the link. I think it's Monday or so. But there's a lack of consistency with the dividend long-term wise versus like Pepsi, Coca-Cola, Procter and Gamble, Chevron, Apple, Microsoft. Kind of get where I'm going. Now, let's jump to the next and final dividend stock, which is Trinity Capital, sitting at 1460, a dividend yield of 13.97%, a PE ratio of 8.90. The average volume is 532.74K. The market cap is $860.02 million US dollars. Year range is 1305 to 1544. Day range is 1442 to 1463. Previous close is 1436. This is kind of going to be challenging again with these business development companies because there's always fear that R word, and it ends with Eschen, okay? What happens with the business development companies? That's why you have to be well diversified. And if a thing that starts with an R and ends with Eschen happens, I'm going to go after the dividend growth stocks because the price per share is going to be down. So that's going to be a huge change with the dividend portfolio. And we may not know if these business development companies' dividend is sustainable. So we have to be careful with that. Now let's jump to the revenue trends and dividend history. And again, for being so new, you have to be careful. Okay, the revenue trends have been very good. Annually in millions US dollars, 2020 54, 2021 82, 2022 145, 2023 181. So again, look at these trends. Quarterly dividend 29 cents, 33 cents, 55 cents in 2022, 57, 60 cents, 61, then 47, then 53, then 54, then 50, then 51 cents. So that's the distribution rate. Look at this payout ratio. That's high. So with these BDCs, this is why once I get to 200, I'll just leave them alone, use their passive income to buy dividend growth stocks, and then focus on buying dividend growth stocks. The reliability is not completely there. I feel more confident in my dividend growth stocks, so I'll emphasize that numerous times. Look at that payout ratio, 98%. Number of dividend increases in the last 5 years is 10. Dividend growth in 5 years, 18.69%. So if you bought one share, you made 204 with a 13.97% dividend yield. Be very cautious with high yield dividend stocks. You have to do your research. I was very basic with this one. To do more in-depth research. Look at their distribution. Look at their debt. Got to be careful with these. That's why you go see a financial advisor and tax advisor. You don't use my channel as for entertainment purposes only. I'm sorry, you use my channel for entertainment purposes only. I'm showing you my passive income journey, passive income strategies. So I'm just being very clear with my disclaimer. You got to go see a tax advisor or financial advisor. You can lose money with your investments. So you have to do your due diligence. Be aware, investing in the stock market, you can lose money. I own all three of these shares. Something drastically happens, a dividend cut or something crazy. Yeah, I'll sell them. But I'm just being very honest with you. I'm planning on being long with them. I'm planning on using their income to buy dividend growth stocks, get to about that 200 share mark, and go from there. So go see a financial advisor, go see a tax advisor for financial advice and tax advice. Don't use my YouTube channel for any form of financial advice or tax advice or anything of that sort. You have to be extremely careful. I've lost money in the past. I've gained a lot of money. I've gained more money than I lost. So be aware with that, with your investments, and make smart, educated decisions. Take care and have a good one.